Hello friends, thank you for your overwhelming response towards my second video, how much life insurance do you need? In fact, I was happy to receive not only your feedback but certain queries also, like how can we afford such big life insurance cover? Or how much return should we expect out of a life insurance policy? There are questions like what's the difference between insurance and investment? As well as people have asked which is the best investment tool to invest in the market. Well, as a certified financial planner, I will try to answer all your questions. However, before that, I will request you to subscribe to my YouTube video and keep your notifications on so that whenever I upload my weekly video, you get notified. Also, please like and share so that more people come to know about it. Anyway, let's come back to today's topic, which is insurance versus investment. I would like to start with a disclaimer that whatever I am talking here is basis my personal experience and my personal learnings, and any disagreement to that is most welcome. Well, what's the difference between insurance and investment? We earn, and that's our income, and we spend, so that's our expense. So post all the expenses, the money that stays with us is our savings, and we would like to invest this savings so that we generate better return, because money produces money. So the purpose of investment is generating a return, whereas the purpose of insurance is protection against the risk that you are carrying today. So I will try to explain with a small example. Let's say I have a two-wheeler and I am planning to buy a four-wheeler 2 months down the line. I am expecting a bonus from my company and I will invest that bonus in the down payment for that four-wheeler. In fact, I'll be selling off my two-wheeler also, and I will invest that money also as a down payment for the four-wheeler. So after 2 months, I will not have the two-wheeler at all. Still, I will insure that two-wheeler, and I would not leave it uninsured for next 2 months. Why? Because the risk of an accident for the two-wheeler is as of today. So insurance covers your risk, which is as of today. However, investment generates return, which is as of tomorrow. That's the basic difference between insurance and investment. Well, in finance, there is a common term which says that to generate higher returns, you need to take higher risk. However, vice versa is not always true. That means it doesn't mean that if you take higher risk, you will always get higher returns. Well, there are multiple products available in the market to invest, like fixed deposit, corporate bonds, debt mutual fund, equity mutual fund, or direct equity, real estate, gold, etc., etc. However, where to invest? The answer lies on your risk profile. How much risk you can take to generate return, and which is most important to you. If higher return is most important to you, then you should be ready to take higher risk, and you can invest in high risk products like real estate, equity. However, if for you, the protection of your principal is most important and return takes a backseat, in that case, you should invest in safe instruments like fixed deposits. Well, most of us are moderate risk takers, and we generally balance our investments in high risk, moderate risk, as well as low risk instruments. Well, life insurance that way is more a protection tool. And if you have already calculated your human life value, this is my last video, and you are looking for a high life insurance cover, then you should ideally look for pure term insurance plan. A pure term insurance plan provides you only life cover and does not give you any returns. Well friends, when you look at your Mediclaim policy or you look at your car insurance policy, I'm sure you are not expecting any returns out of those policies, correct? Then why to look for return out of a life insurance policy? But life insurance has other type of products also, like endowment products, unit linked insurance plans. Well, endowment product will give you low return and a moderate life cover. So this is more for people for whom safety is most important. Unit linked insurance plan invest more into market, and naturally the risk varies between moderate to high depending on the fund that you choose. Well, whatever we discussed today there are three basic fundas which comes out of this video. Number one is that you should keep your protection goal and your investment goal totally separate. So if you are looking for protection, you should buy a term insurance plan and only a term insurance plan. However, if you're looking for investment, whenever you're looking for investment, you should always remember that higher the return is possible only if you have taken higher the risk, because return and risk is directly proportional. That is funda number 2. And funda number 3 is you should invest basis your risk appetite only. Also, don't keep all your eggs in a single basket. Try to diversify your portfolio, because diversifying your portfolio also brings down your risk component. So that was all about today. I am sure you will like the video. I will wait for your feedback. In fact, I will be glad if you can tell me on what you would like me to speak about in my next week's video. Till then, thank you, stay safe, goodbye.